some ground rules. Okay, because sometimes the expectation is different. Yeah, so we need to align the expectation first. And so number one, tonight there's no introduction on cryptocurrency. Just to be clear, anything very volatile, like go up and down, it may make you 5 times, 20 times more, but it also can mean that you lose your everything. Those things we won't be touching at all. Okay, nothing wrong with them. It's just that we choose not to talk about them. Then the second thing is for stocks, we are talking about only specific categories. We're not going to share about all kinds of stocks, right? If not, then it will take 3-4 hours to talk about stocks. So later Yuan Tai will talk about one specific category of stocks only, and that category is considered the relatively very important, relatively lower risk kind of stocks. Okay, there's no such thing as zero risk one. Even your DBS OCBC is not zero risk. If you put in 200,000 inside, and if they collapse, you only get back $75,000. Because they bought insurance on the $75,000. Also, there's no such thing as zero risk, but tonight we're going to talk about relatively low risk things. Okay, and I highly recommend that we keep taking notes, number one, and keep asking question number two. And then Yuan Tai, me and Erwin will be just for the fun of it, keep it very energetic and fun. We will be asking you lots of questions, and then please participate on the Zoom chat. Because of time constraint, we can't unmute you and keep hearing you share, but please participate through your fingers. Okay, this is very important. So without further ado, I'm going to introduce Erwin, and then he will share with us some newspaper articles he has been reading, and also some of the trends he has been tracking. He looks very young, I know. In fact, he is very young. But he is very financially savvy. Right? Very few people his age are always tracking financial news. But Erwin is one such person. He is, by the way, please give him your full support. Okay, so as I announce his name, if you can go to the Zoom chat and type Erwin, lots of exclamation mark or lots of love, lots of heart shape and things like that. Okay, ready? Ready? 1, 2, 3, away!
Thank you for the introduction, and thank you everyone for coming to our webinar today. So, as you might have heard from Eugene, I am very young. I'd like to assure you that I'm young. I'm only 25 this year, but I have quite an old man habit. And one of the things that I like to do is keeping up with the news and clipping them. But in the past, I used to take down newspaper articles physically. Right now, we do screenshots because we've moved on with technology. And I have a few articles that I find is extremely interesting because there's information there which is not very well known, but it is a matter of fact in the world. And in fact, the first one that I'm going to share is from a robo-advisor survey from sept. So they are quite a popular robo-advisor in Singapore, very well established and very well known. And one of the things that they have done, one of the surveys, they have found out that over half of Singaporeans do not have enough savings for their retirement. And in fact, with this COVID-19 pandemic, a lot of the people's readiness to retire has worsened. And I would just like to push back a little bit. A few months ago in July, released by one of the managing directors of MAS, Monetary Authority of Singapore, he has mentioned that the core inflation rate in Singapore is expected to increase to 4.0 to 4.5% in Q3 of this year. So within June to September period. And what do we see just last week, August 23rd? The July inflation figures has risen to 4.8%. This inflation rate currently is overshooting our expectations. And right now, there's even more news coming in that we're looking at the inflation figures is still 3 point something to 4 point something. Everything is still very haywire. So what if you already have money? Some people may ask. And I would just like to show over here. During a poll, okay, Singaporeans also, many people that earn $20,000 per month also have problems starting retirement planning. And in fact, a lot of people keep the cash idle. So we have actually boiled down all these things we have condensed it into 4 points over here. And we are going to show them to you right now. The first one is a lot of people cannot control spendings. A lot of people, including me in the past. So what do I mean by I cannot control spendings? Everybody have expenditures, but how much are you spending on the necessities? Is it still a necessity, actually? One example, when I go for my coffee, people my age, very, very eagerly, they will say, let's go to Starbucks, let's go to Coffee Bean. But over here, I would say, Erwin, I am going to go to my coffee shop and buy my $1 coffee. So there is one example over here. In fact, how many of us over here knows friends that have this behavior? So instead of going for the simpler version, they go for the more exquisite version. Can you type yes in the chat over here? Just so we have a poll over here on our audience. Anybody? Anybody? Boon Liang, yes. Oh, he sent me a direct message. Lin, yes as well. And this is a very major thing in Singapore. A lot of us do this without thinking. Shuan, yes as well. Diana, Susan, thank you so much for your response. And we're going to move on to the second point over here, okay? The second part is there's no financial planning. And when I say no financial planning, I mean in the long term. You know what you're going to spend tomorrow, what you're going to spend next month, maybe your electrical bills and all these things. Next year, maybe you want to buy a new TV or you have some sort of plan in your mind. But what are you going to do 10 years down the road, 20 years down the road? So a lot of us here are adults. And within that time period, a lot of us are going to reach retirement age. And some of us would have been retired in 20 years. But what are you planning for that period? That is one thing that a lot of people miss out. The third is the cash is king mentality. Everybody loves cash. I love cash. My wallet, cash inside. Of course, with my cards and everything. But too many people keep too much cash. And cash is a very volatile, not really volatile. It can only go down because it's affected by inflation. Inflation doesn't go in the reverse. You see, inflation only brings your money's value down. And leaving too much cash will make your assets drop faster. And lastly, a lot of people are not staying invested. So some of us, maybe we invest in something and all, but like, for example, right now, you're thinking that, the economy isn't doing so well now. Let me liquidate all my assets and leave them in my bank instead. This is one thing that some people do. And in fact, I used to have this thinking as well. So I'm not guilty. I'm not innocent of this problem. And Yuan Tai is going to share with you later why this is a bad move. So the abundance team, Eugene, Yuan Tai, and myself, we have come up with the 3 pillars of retirement, each starting with the letter I. And the first pillar that we're going to look at is investments. My colleague Yuan Tai over here is going to talk more about investments. And in fact, let me introduce you to him. He has been doing investments since the young age of 19, younger than myself right now, since his university years. And currently, he's doing so well that the papers have interviewed him and his wife to talk about how they manage their finances together as a couple. So it is my honor to introduce you, Yuan Tai, who will be sharing with you more about investments. Yuan Tai, please.
Thank you, Owen, for the introduction. Before I proceed, just now I noticed that Josephine raised her hand. Do you have a question, Josephine?
I might have missed out, sorry.
No,
Okay, no worries.
I'm just meddling with my phone.
Okay, no worries.
Yeah.
Okay, and then Elaine, do we get a copy of the recording? The answer is no, we don't send out our recording. But if you have any questions or you want to check back anything with any one of us, just feel free to ask. You can type in the chat box or you can ask at the Q&A after the whole webinar. Yeah, that's why we have a live webinar. And everyone, please pay full attention. Please have your notebook and pen ready. Okay. So during the COVID, we are all stuck in Singapore, and I started a lot of hiking groups, and some of my hiking friends are here. Thank you for your support. And I also started a cycling hobby. So I cycled one day. I was cycling from my home in Hougang to Chinatown. Oi, what? Why are you carrying your bicycle? I'm carrying my bicycle because I don't know how to ride. If you don't know how to ride your bicycle, learn how to ride your bicycle. Ladies and gentlemen, many of us, our bicycle is like our hard-earned money. So Mondays to Fridays, 9 to 6, we work hard and we save up and we put this money inside the bank, and that gives us 0.05% interest every year. So it's as if we are carrying our bicycle instead of riding our bicycle. But in the next 1.5 hours, who of us here would like to learn how to use our money, the bicycle, and ride towards a happy retirement? Please type in happy inside the chat box right now. Type in happy, Lane, happy, Lynn, Merlin, happy retirement. My t-shirt, happy retirement. Logo. Thank you. Happy, Josephine, happy. Thank you. Susan, happy. Thank you. So we all want to learn in the next 1.5 hours. So we share 6 different ways for you to build your passive income stream. But many of us, some of us, we want to learn how to ride a bicycle, but we end up doing this. So some of my friends, they invested in cryptocurrency. At the beginning, they make multiple times, 2 times, 3 times. But this year, cryptocurrency crashed. So we end up doing silly things with our money, like this person doing the stunt bike and end up crashing on the floor. So without further ado, I'll jump straight into I'll share with you 3 streams of passive income. My first stream is property rental. And this picture over here is a studio apartment. Beautiful studio apartment. But it's not in Singapore. It's in Manila. The size is 27 square meters, about 300 square feet. So this is a freehold apartment in the 33rd floor, downtown Manila, right smack in the Orchard Road of Manila. Freehold apartment comes with a parking lot. Please make a guess. How much does this apartment cost in Singapore dollars? Freehold apartment, 33rd floor, right smack in downtown Manila. Make a guess. How much does this cost? Please type inside the chat box. Make a guess. 600,000, Elaine. Good guess. Any more guesses? Let's have some responses. 200,000, Lin. Any more guesses? Boon Liang, 400,000. Ryan, 300,000. Thank you for your responses. All very good responses. Lin is the closest. This apartment costs 130,000 Singapore dollars. And it comes with the title deed to a parking lot as well in Manila. So how do we get started investing in overseas property? I started my journey 8 years ago. In fact, it's 9 years already. I think 2012, 10 years already. 10 years ago, I went into the overseas market, because at that point of time, I'm still single. So with just one person, and I'm just looking at some options. And how did I get started? So first of all, I have to do lots of research, and I look at different countries. And Manila is one of them in terms of Southeast Asia. So distance-wise, it's not too far from Singapore, about 2.5 hour, 3 hour flight time to Manila. And Philippines is one of the Southeast Asian country in terms of GDP, is doing quite well. So there are other countries like Indonesia and Vietnam as well in terms of Southeast Asia. So choosing a country with good yield. What's the yield for Philippines property? So the yield is about 6%, the rental income yield. And I did some research and I did some comparison. And in fact, I made quite a few trips to Philippines. So 6%. And then some of you may ask, Yutai, why don't you go for Indonesia? And there's a reason why. I'll share with you in the next few slides. Number two, choose a reputable developer. So this particular condo is developed by Century Properties. Century Properties, one of the biggest property developer in Philippines, and has a good track record. It has been around for quite a number of years, focusing on the mid to higher end projects. And number three, find a reliable agent to handle your property. This is very important as well, because obviously most of the time I'm not in Philippines, but I'm here in Singapore. So I need to have someone that is very reliable to help me to handle the rental. And fortunately, I was connected with two husband and wife property agents, and they helped me to handle my projects. Risk of investing in overseas property. So of course, with every investment, there are risks, and here are the risks, particularly in terms of overseas investment. Currency exchange. So currency exchange, we are, of course, for me, investing in Philippines, I am at risk for currency exchange, the Sing dollar to peso. Peso does fluctuate quite a bit. And number two is political stability. So Philippines right now is under Marcos Jr. Marcos Jr. has just taken over this year. And generally, political stability, Philippines-wise, is quite stable. You don't have riots and all that like is happening in other countries in Southeast Asia. So it's quite an attractive proposition in terms of investment. You want political stability. You don't want suddenly you invest and then things collapse. Like some of my friends, they invested in Myanmar before the coup about 8 years ago or so, during the same time I invested. And fortunately, they managed to cash out. But for most people, some Singaporeans who are in Myanmar, the political situation is very unstable right now. And distance, of course, one of the risks, because I'm in Singapore and obviously I'm not there to monitor my investment all the time. So this one is the currency exchange Singapore in terms of SGD to PHP. So you can see it fluctuates quite a bit, but generally it holds its value. The peso does hold its value quite well as compared to, remember the chart I showed you, the Indonesian rupiah doesn't hold its value well at all. And that's why some countries, like I have friends, neighbors, ex-colleagues from India, and they share with me that interest rate is quite high in India because the currency doesn't hold its value well. So this is, in terms of foreign investments, this is one of the risks that we have to consider as well. But with that said, of course, I went in for a good reason, because there are advantages to investing in Philippines property. So the biggest advantage, in fact, is less tax, capital gains tax of 6% plus stamp duty 1.5% plus another 2% of property tax. So it makes up to about 9.5%. But in Singapore, in terms of Singapore property, you compare Singapore property, it's much higher, with the government announcing last December additional buyer stamp duty. So you have 4 plus 17%. And of course, the property taxes. And on top of that, in terms of rental income, you also have to consider your income tax. So all these are the taxes in terms of Singapore property investment. In terms of quantum as well, 110,000, 130,000, which I paid for my investments. Compared to Singapore, 130,000, you cannot even buy a parking lot for the condos nowadays. In fact, the BTO resale some of the BTO have already gone up to above $1 million. So very high quantum in terms of Singapore property investment. And of course, the rental yield is higher as compared to Singapore property. Generally, Singapore property about 3%. For Philippines, you can get about 5 to 6%. Of course, capital appreciation. So over the last 10 years for Philippines has been about 7.5% because it's a developing nation. In terms of Singapore property, the heyday is over. So you won't be able to 2 times, 3 times your capital appreciation. Average over the last 10 years, about 2% capital appreciation for Singapore property. Okay, so passive income stream number 2, dividends from stocks investment. So for those of us who have not experience buying stocks, let me just put it in layman's term. Dividends basically is the company, you buy the share, and then the company declares that it pays you, it shares with you some of the profits for that year. So it can do this once or twice a year, up to 3 times a year. The company, they'll declare if they have made good profits, then they'll share out some of the profits to the shareholders, which is you and I. And over the past 1 year, in 2021 to today, till date, first quarter, the dividends payout of these 3 companies are generally quite good. The top 3 companies, ST Engineering, Wilmar, and Sanders. But do take note that dividends is not guaranteed because year on year it would vary depending on the profitability of the company itself, which is why we need to do our research in terms of stock investment, and we need to look at the spreadsheets, the financial statements of the stocks, the companies, and make sure that these companies are profitable. And here's a quick breakdown of what are the things to look at. How do we choose company with good yield? So we look at the top line revenue, which is the first row of numbers at the top. All these are in millions, so you add 3 more in thousands, you add 3 more zeros behind these figures. And you also look at the operating income or loss, which is net profits. So for this particular company is Wilmar. Wilmar is generally quite stable income for their past 3-4 years. You can see that it's generally quite stable. Even the COVID did not actually really impact or affect this particular company. Oh, sorry, this one is ST Engineering. Yeah, ST Engineering not affected by COVID because, in fact, during COVID, ST Engineering did quite well because a lot of airlines cannot fly their airplane. Then they park at the airport and then they send for maintenance. So ST Engineering, the maintenance arm, actually did quite well, and they can actually have quite a good earnings per share. EPS stands for earning per share. If you look at that as well, so between 16 cents to 19 cents. So they declared their dividends payout this year, this year, yeah, this one updated one, 14 cents per security means per share. And how do we calculate dividend yield? Very simply, we take the dividends, 14 cents, divided by the share price, which is about $4.07. So we get about 3.43%, which is the figure I show you on chart, dividends yield. So this is the dividend yield. So take note once again, dividend yield is not guaranteed. It will vary depending on the profitability of the company. So we need to, for this particular income stream, we need to do our research. And some of you may ask, how about the recent US stock market correction? So I show you this chart. This is S&P 500 S&P 500 is the 500 biggest companies in the US stock market. So you have names like Amazon, Facebook, Google, all these companies, big companies. But this year, you can see that you actually dropped 20.6%, S&P 500. But this is just one part of the story. So my answer to those of you may ask, recent US market correction because of the Ukraine war, because of the uncertainty in the pandemic recovery, what should we do? In fact, we can take advantage. This is a very good time to buy companies, to invest, go into the market and buy good companies at a discounted rates. Let me share with you 3 investing strategies. Investing strategies. Oh, okay. I got a private question just before I move on. Shuan, I'll answer your question at the end of the webinar, if that's okay. So she asked, how is your rental yield calculated? I'll answer that at the end. Okay, let me go on to the 3 strategies, starting with the letter D. Make a guess, what are the 3 investing strategies? Starting with letter D. So those of you who have experience or knowledge investing in stock market, yeah, diversify, very good. Elaine, that's one of the D. Please guess what are the other 2 Ds. So diversify is one of the D. What are the other 2 Ds? Please type in the chat box, make a guess. And for your information, it's not D24 or durian. Durian season just over. In fact, it's coming back again soon, somewhere end of this month. Starting to see durians, but it's not durian, not durian. Let me say again, not durian. Okay, let me guess. Come, those of you who have experience investing in stock market, please share your knowledge. What are the 3D strategies? Diversify is one of them. Please type inside chat box. Make a guess. Okay, tonight is not a one-way webinar. Please participate actively. Okay, those of you who, maybe I'll call some names. Mike, do you know what are the 3D strategies? Mike, do you know what are 3D strategies? Can you unmute yourself or type inside the chat box? Michael, diligence, good guess. It's not the right answer, but that's a good guess. No idea. Okay, no worries. I'll review to you the answers. But before that, let me show you the same chart, S&P 500, this S&P 500 chart, but we stretch it out to over 20 years, 22 years to be exact. Divest. Yes, let's diversify. Mike, thank you. That's a good guess. That is one of the Ds. Okay, look at this S&P 500 chart from 2000 to 2022. And you can see that it goes up and up and up. Of course, that's going up and down. So at some point in the subprime mortgage crisis and the SARS period, and of course, the most recent dip is in 2020 when COVID happened. And it went up again, and actually there's a slight dip this year since the beginning of this year after the war in Ukraine broke out. But you notice that the trend is always going up and in an exponential curve. So here are the 3D strategies. This S&P chart illustrates to you, you diversify across different sectors, different countries. Diversify, don't put all your eggs into one basket and you put into different kind of industry, different kind of countries, different kind of business models. Then you spread, because the fact is that not all sectors will be affected by the COVID. For example, we take the pandemic as an example. Certain sectors are affected. The hospitality, F&B sector, tourism is all affected. But we can see that the big farmers, the medical And in fact, the finance also doing quite well during the pandemic. So not all affected by pandemic. So you diversify, you spread out your risk. So that's number 1D. Number 2D is duration. You can see, remember the chart I showed you initially? This year alone, if you just look at this year alone, S&P 500 went down by 20%. And a lot of people panic and say, wow, 20%, better sell, better sell, better sell, and they take a loss. But if you look at it over a long period of time, look at this S&P chart. It's a very beautiful chart that shows you it's going up. Need to stay invested, have your skin in the game for a longer period of time, at least 10 years, 15 years, 20 years. And finally, dollar cost average in layman's term, you set aside certain amount, 500, 1,000, 2,000 every month, and you just invest it, set aside and invest it. Don't try to time your market. Try to time it, and we time the market. We try to time when you want to aim at buying low and selling high. Most of the time, we end up doing the opposite. So one of the strategy, dollar cost average, you just set aside a certain amount, 500, 1,000, 2,000 every month, and you just invest it, and you can average out, and you can spread out your risk. So these are the 3D strategies, and there's good news, which is my third passive income stream called the low effort portfolio. Let me repeat, this is a low effort portfolio. Low effort portfolio meaning that there's minimal effort required. And I love this portfolio because instead of having to look through all the financial statements, which I do, take up quite a bit of time, you set aside time every day to look at the spreadsheets, do your homework. This low effort portfolio doesn't require so much of research work, time and effort and expertise. And it's a perfect way to practice your 3D strategy and to invest into the market. So what is this low effort portfolio, LEP? Let me call it the LEP for short. Let me show you what does this portfolio do. I call it the fund of funds because it is spread out across different sectors. It has global equities, Asian bonds equities, Asian equities, Singapore equities, as well as emerging market and China equity. So this particular portfolio has many well diversified. Is the fund of funds, and within each category there are many companies that are invested in it because you are buying into the funds, which is familiar names A and B, AB, Global, BlackRock, and Schroeder. So this particular portfolio consists of all this portfolio. So that's why I call it the fund of funds. And the magical thing is that it does rebalancing for you as well. It does all the rebalancing for you. So it is pretty hands-free. And you may wonder how much is $100 invested. So since the inception of this particular fund, this has been incepted for 10 years already, and we can see the very same trend of graph. There's up and down, up and down, up and down, up and down. But it is generally going up. So this graph looks like the S&P 500. It's going up. And you stay invested over a long period of time, over 10 years or more, you can see that it generates returns, very stable returns. And well diversified, low risk, low effort, very good for people who are just getting started. You don't want to immediately risk it all and jump straight into the stock market because there's so much research to do and you want to get started. This is a good way for you to get started and invested into the stock market, like to take advantage of this period of time when there is a dip in the stock market. So let me just sum up my 3 passive income streams: property rental, dividends from stocks, and low effort portfolio. Time and knowledge required for property and stocks. You need to do your research, need to spend time. Low effort portfolio is less effort, time, knowledge required. You just got to pick your portfolio and then it is automatically running on its own. Risk, high risk for property rental. Of course, there's a lot of capital you have to invest. You are buying in this if you are buying Singapore property, it's at least a 7-figure sum. Dividends from stocks, up to you, can be high or low. Low effort portfolio generally quite low for dividends stocks. Dividends from stocks and low effort portfolio, high risk. Stocks can go to zero. So when I first started investing, in fact, I made $2,000 loss investing in Singtel. But many people have also made losses in High Flux. Some of you may have heard of High Flux. Some of you have heard of Noble as well. All these companies, they went bust. Thousands of retail investors made losses. So it can go to zero. That's the danger of investing in stocks. Low effort portfolio, risk is lower because it's well diversified. Returns looking at 3 to 5%, 4 to 7% for the property rental stocks, low effort portfolio. Liquidity, property rental, it's very low liquidity. Because dividends from stocks, you have higher liquidity. Low effort portfolio, I'll say is medium, low to medium. From year 5 onwards, you can take out a portion of your investments. So please type inside the chat box, share with me which of the 3 do you like. Hey Diana, I don't own a HDB property. That's why I can invest in overseas property. Diana, so Diana asked if I own a HDB. No, I don't. Yeah, if you own a HDB, you can't go into overseas property. Yes, Elaine, LEP. Third one. Okay, please type inside the chat box which one do you like. Property rental, number 1, dividend from stock, number 2, or LEP, number 3. Please type. You can type all 3 as well, because all 3 of them are inside my own investment portfolio. That's why I share. Josephine, LEP. Okay, very good. Okay, so this period of time, Mike, LEP. Thank you. This period of time, it's a very good opportunity. If you have spare cash, don't leave it sitting in the bank growing at 0.05%, but really look at investing into all these passive income streams. And I've just shared 3 of them. So there are 3 more to go. 3 if you have spare cash. Yes, Diana, of course, have spare cash here. So investments, you have spare cash. In fact, not just your spare cash. Very importantly, invest your retirement. As you build up for your retirement fund, you need to invest that. Don't leave it sitting in a savings bank. A lot of my friends, they leave their income sitting inside their bank. Then they end up carrying their bicycle and carrying so heavy. But aim of tonight is to invest. So 3 more to go. And without further ado, I want to introduce this person. Is known as the man of abundance, and it is my honor and my blessing to have crossed paths with him 3 years ago. Time flies. Let's put our hands together and welcome Eugene Xia.
Thank you. You're really very kind. Yeah, actually, Yuan Tai is a real man of abundance. He's very kind. He wants to grow his retirement saving, not for himself. He wants to give it away, especially to orphans and kids who are less privileged. Yeah, I really feel that more people should be like him, to earn more money, to grow more money, invest more money, not for our own sake. I mean, our body is only this size. Even if you buy a super mega castle, your body will only occupy 1 room, right? And then our stomach is only this size. Even if you have millions of dollars to buy food, in Chinese we say 山珍海味, right? In the end, you only occupy 1 stomach. In fact, the older you are, the less food you tend to eat. Also, the reason for us teaching this about retirement with abundance is not so that we can buy a Lamborghini or we can buy a Switzerland home, but really just like Yuan Tai, to give it away. Hey, who resonates with this? Can you please put yes? We want to grow more so that we can give away more. Just put yes in the Zoom chat if you resonate with this kind of values, that you want to grow your money so that you can give away more. No need to give away everything like Bill Gates, but just give away more. Some of us give 10%, some of us give 20%. Yeah, it's totally up to you. Some of us 2%, but ultimately, don't end up saying things like, oh, I wish I can give, but I didn't really grow my money, so I couldn't give. Also, tonight tonight is the chance for us to learn knowledge. Yeah, but after knowledge, need to take action. Right? I promise you, if you listen to the knowledge, later on your money is still stuck in the bank, right? You're not going to grow in abundance. It is something I can promise you. Okay, I'm going to share some content. Please bear with me. Yeah, so this is a newspaper article about me 2 years ago, 2020. Right, it shows that I was laid off. That means I was let go of my company. So from earning $24,000 per month, suddenly it became zero. Yeah, $24,000 per month, not 30,000. That one is foreign talent. Yeah, so I suddenly found myself with not enough. Right, I thought about abundance, but in those few years, 2013 I was let go. 2014, 15 I was very broke and I started borrowing money from people. In those 3 years, I was really in scarcity, not in abundance at all. And that's the reason why I like to talk about low risk investment plan. Yeah, because when we don't know how to grow passive income, when we don't know how to build low risk, then we usually end up with very, very fragile, I call it fragile investment portfolio. You know, one moment it's high, one moment it disappears. One moment you are earning a lot of money, one moment it disappears. Also, don't be fragile. We need to be very resilient or even anti-fragile. That means we need to be able to be recession proof, and that's the reason for us talking about this tonight. Yeah, so because of this new mindset I had of growing resilience, of growing anti-fragile, of growing passive income, I've been featured multiple times on radio as well as newspapers. This newspaper article was just, I think, about 4 months ago. So I'm very, very grateful to be able to share this knowledge with everyone. Those who have been reading the news will know that it is very, very scary. Not only the war is scary, the inflation is very, very scary, right? It scares even the government. That's why the government has been doing a lot of things to mitigate especially the poor people. The poor people, you know, just a 20-cent change in the coffee can mean a lot, right? Because let's say if they earn $1,400, then each month they spend $1,380, then they're only left with $20 for so-called savings. So each time the egg prices, the rice, coffee go up, it really is a very serious impact. Can you imagine such a ridiculous number, 8.2%? I really find it super, super ridiculous. Yeah, unfortunately, many estimates by those analysts, financial analysts, point to roughly the same numbers. I mean, you can say this is inflated, then it's going to be 5 to 6%, which is also very ridiculous. Right? So I suggest all of us really don't be complacent, right? Don't be too comfortable. Really tighten our belt and learn how to grow our money faster than the inflation. Yeah, so just now, Yuan Tai already talked about investment. Now I want to talk about this thing called income. I don't represent NTUC income. This is the English word called income, not the company called income. Wow, some people misunderstand me. Okay, so the reason for my segment now is how to turn your active income, in other words, your salary, or some of you run businesses, your business income. Hey, don't tell me your business income is passive. Okay, that's lying to yourself, right? You do have to turn up to do consulting, coaching, speaking, training, sales. So that's still considered active income. Like for example, I'm into sales, I'm into consulting. So that is active income. That's not passive. So my passive income is the one that I put into other instrument. That one is called passive income. So let's talk about what these instruments are. I love to give analogies. Like just now, Yuan Tai talked about cycling. I love that analogy. Right? A lot of people think that, I'm not a financial analyst. I'm not diploma grad in financial management. No need to learn about money. I'm very sorry to tell you, it's almost as if like you are carrying bicycle, which is, you think about it, that image looks so silly, and yet we are doing it because you have money. No matter whether you're a financial analyst, whether you're a financial planner, you have money in your bank, right? You cannot avoid that. That means you have bicycle in your house. You cannot avoid that. So you either learn to ride a bicycle, or you end up gathering dust, or worse, start to carry the bicycle, walk around, being burdened by money. So I suggest that we learn at least a little bit of knowledge tonight. Okay, so active income put into this machine, and then it will turn into passive income. After a passage of time, don't allow people to scam you to believe that, today you put in, tomorrow I can give you passive income. The 100% is scam. Quickly run away. Okay, when it sounds too good to be true, very often it is not true. Actually, short story. I have this friend of mine who's very prudent. Right, he says I'm very low risk, very conservative. So I share with him methods like this. Right, put active income for let's say 10 years, 15 years, And then at the end of 10 years, 15 years, when he retires, he will get passive income for the next 10 years, 15 years. Let's say from 65 to 80. Then he say, I don't want to wait. Oh, so the few months later, I went to meet him for coffee. He tell me, hey, I found a plan, wow, much better than your stupid vending machine. Right? I put in money. Hey, the very next month, they pay me 8% per month. Not per year, per month. Then I say, sorry, so how do they grow money 8% and guarantee you some more? They say, oh, it's Forex. And they even show me the screen, say, wow, so far, all these Forex trades, this mirror from Japan, yen, euro, dollar, and all this US dollar pairing has earned me at least 12 to 15% per month. So I only give you 8%. So the rest is my profit. Then I asked my friend, what makes you think that the screen is not fake? Right? What makes you think it's a live screen really from Forex machine? It show you live figure. Then his reaction is, yeah, how come I never asked this question? Do you know why I'm so sensitive to this? Because in 2014, Mr. Eugene Xia, was scammed by this thing called Forex. Okay, in the end, Forex itself is not scam. Okay, don't misunderstand me. I'm saying that some people use the name Forex and they try to trick you into looking at screens, a lot of numbers. They try to confuse you. And then in the end, you say, okay, wait, I believe you. Then you start to park with your money like 50K, 80K, 100K. And then by the way, for the first few months, they will pay you one. They're not so stupid, right? The moment they take from you, then they run away. No. Okay, they will pay you because they want you to refer to your friends. Right? The moment you see money come in, then you can show your friends, say, hey, really, it's not scam. No, I've been receiving for the past 8 months, 8% not per year, per month. Then your friend say, hey, real one. I thought it's scam. Then your friend also start to put in money. Okay, so that's how scams spread. Anyone here has heard of a friend being scammed before? Please put me. Not that you are scammer. I'm saying that you have heard of friends being scammed before. Please put me, M-E. Okay, this is not asking you for confession. I'm just asking you whether you have heard of your friends being scammed. Okay, please put me. Calling once, calling twice. Wow, all of you very lucky. None of you got scammed. Okay, looks like I'm the stupid one then. Very good. Also, please promise yourself don't be scammed because it's, Singapore scam has been rising. Some people call you from plus 65 number. Some people call you from UK. Just be very mindful of it. So whatever I'm going to describe to you now are all MAS regulated products. Okay, very, very boring things that the government approved. Okay, nothing very fancy like 8% per month. Yeah, most likely like 4 to 5% per year. Okay, not 8% per month. So the first thing is CPF Life. Boring. Oh, CPF, time to log out. I got to sleep already. I tell you, I've been traveling around the world, sometimes for speaking, for coaching, and I was based in Hong Kong for 2.5 years. No other country can compete with Singapore CPF Life. I'm not a PAP member, okay? I am really speaking on behalf of myself only, Eugene Xia, as a father of 3, as a hard-working sole breadwinner. I'm telling you, this is a fantastic gift that the government gives us. Can anyone tell me your ordinary account minimum guaranteed return is how many percent? Go to the Zoom chat. Ordinary account, the account that you use to pay your HDB loan and all these other loans. Okay, how many percent minimum guaranteed is your ordinary account? Do not Google. Just share from your own experience and knowledge. Good try, Diana. Good try. Mike, very good. Okay, remove the question mark and you are right. It is 2.5%. Xuan, you're right. Merlin, you're right. Okay. So some of you say, 2.5%. I can do better than that. Hey, please don't check government. 2.5% is very, very good. Okay. However, okay, if you are very cash rich, I suggest that you use your cash, okay, to pay off your loan. Okay, let your OA remain there. Yeah, because most likely, your interest should be below 2.5%. I know interest is rising nowadays, right? The interest I've been enjoying from UOB is still in the 1, right? 1.9 something, right? So hasn't really reached 2 point something, but who knows, right? Maybe in a few months time it's 2 point something. Then okay, then too bad. Okay, use the OA to pay. But if it is below 2.5, then please use your cash to pay. Okay, because the differential between the interest rate and the 2.5% is your income. That is passive income right there, and most of us didn't notice. Okay, so please be watchful about interest rate, and then please make a decision whether you want to use OA to pay your housing loan or use your cash to pay your housing loan. If you use your cash, then good news, your OA will keep compounding at 2.5%. Now, what's your special account minimum guaranteed? What's your special account minimum guaranteed? Yes, very good, Marlene. It is 4%. Okay, 4% is very, very attractive. Don't forget, it is guaranteed. Okay, not illustrated, not projected. It is guaranteed. Okay, so please don't use your special account money. Go and invest in some funny unit trust. Okay, MAS has done a survey to prove that out of everybody who go and use special account money to buy a unit trust, you know what's a unit trust, right? Like those, you walk into the bank, then the banker say, hey, why are you putting money in special account? So stupid. Come, buy the China fund, buy the India fund. That's called unit trust. Okay, out of all those people who bought unit trust, half of them earn less than 4%. The other half earn more than 4%. So it is your guess and my guess which half you belong to. Okay, yeah. In other words, it's almost like gambling, flipping a coin, right? Yeah. So please don't flip a coin. Just make sure it is guaranteed 4%. Okay, don't keep thinking about that. You should be thinking about the money in your bank. Stop thinking about the money in your CPS. CPS is growing well. Okay, think about the money in your bank, which is growing at, okay, nowadays it's no longer 0.05. Right, got 0.08. Some is 0.9. Depending on what saving scheme you go for, because interest rate is rising, so that's quite good for us also. But it's still in the zeros. Okay, still in the zeros. So obviously look at that money, how you can invest, rather than keep looking at CPF money, how you can invest. So CPF Life is one example. The other example is annuity. Annuity, similar. So annuity is basically CPF Life. CPF Life is basically annuity. Okay. Yeah. Annuity, the definition means you put in money every month, and in the end, when you retire, they give you money every month. Obviously, the money they give you is more than the money you put in. That's the whole point. Also, annuity is private. CPF Life is public, right? It's government one. So obviously, CPF Life is not going to pay you enough. Okay, question time. Ready? If you are a multi-millionaire, you know Singapore has one of the highest per capita ratio of millionaires and billionaires. Okay, so if you are a millionaire, okay, how much money do you think you can get out from CPF Life per month from the age of 65 onwards? Okay, make a guess. Go to the Zoom chat and tell me the number. If you are a multi-millionaire, lots of money, then you put into CPF Life, how much money will they give you at the maximum per month when you retire at 65? Okay, go to the Zoom chat and type the number. Is it 5,000, 12,000, 15,000 per month, 20,000 per month, 30,000 per month? How much money per month do you get from CPF Life at the maximum? Come. It's okay to get wrong answer, but let's participate. Okay, $1,000 per month, millionaire. $5,000 per month from Mike. Wait, one more try. 1,000 and 5,000 is quite a big difference. One more try. I'm going to give you the answer already. Okay, ready? Dun, 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 dun. Okay, by the way, the maximum that you can put in is 288,000. This is as for this year, 2022. They don't care whether you're millionaire or billionaire. Right? You think CPF Life is your what? Your financial advisor. It's the government. Okay, so no matter how rich you are, you can only put in 288,000 in CPF Life, and then you will enjoy $2,100 to $2,280 per month. Obviously not enough, right? Obviously not enough. Okay, I know some of you say, enough lah, why not enough? Hey, hello, you know what's inflation? Maybe it's enough this year. Okay, 2022, you may think like, I think I eat 2 plates of cai peng. I think can. Yeah, but if you inflate it, okay, if Nomura is to be believed, it's 8.2%, but if you don't believe them, then it's maybe 4 to 5%, right? If you inflate it, okay, you don't need to take out your financial calculator. Okay, let me do a very quick calculation for you. Every 20 to 25 years, okay, I repeat, every 20 to 25 years, prices double. Okay, just recall 20 years ago, how much was one cup of kopi in the kopitiam? Just recall. And I'm talking about the exact same product, not that they changed the coffee bean or what, right? It's the exact same product. But imagine, actually inflation is much more than the same product doubling. There's also lifestyle inflation. Just now, Erwin already said, nowadays people don't even go to kopitiam to buy kopi, right? That $1.40 kopi, they 不稀罕, they pay, I don't want. They go for the $6.50 Starbucks coffee. And nowadays got even double-digit coffee one. Oh my God, double-digit. And these people tell me they don't have enough money for savings plan, for insurance, for their children, because they spend it all on coffee or bubble tea or even more expensive drink like alcohol, even worse. Okay, so please, okay, remember what Erwin said tonight. Don't be silly, okay? If you buy the same kopi, even that one will double in price 20 years later. So $2,000 plus, I promise you, not enough. Then we definitely need to use private annuity. Okay, before I tell you about private annuity, okay, I think it is my national service, okay, my basic duty as a financial advisor and as a life coach to share with you how to reduce your personal income tax. Okay, but I'm not going to force you to know this knowledge. Okay, if you want to know how to reduce your personal income tax, I'm going to do a commercial break to tell you about this. Then I go back to the topic of annuity. Okay, so who wants to learn how to reduce your personal income tax? Please put me in the Zoom chat, ME. If nobody put me, then I'll quickly just skip the next few slides and go straight for the annuity. Okay, who wants to learn how to reduce your personal income tax? Please put me. Okay, calling once, calling twice. Can reduce my hubby's weight. Is it? No. Can reduce your hubby's income tax. Yeah, of course can lah. Your hubby what? Yeah, tonight once you learn from me, go and quickly tell him. Don't be selfish, I must tell him. Okay, good. I think 3 or 4 people enough for me. Okay, let me quickly share with you. To reduce your income tax, okay, you can choose to voluntarily top up your CPF. Okay, those who are working full-time, obviously your government has already deducted compulsory CPF already. Yeah, but now I'm asking you to voluntarily top up your CPF, and maximum they only allow $8,000 per year, not per month, $8,000 per year. Right? Some people will find it very little. It's like, I want to top up more. Yeah, some people will find it very stressful. Wow, where got $8,000 to top up? Okay, it's totally up to you. You can put 2,000, 4,000, 5,000, but maximum $8,000. By the way, you can also top up for your spouse, okay, for your loved ones. You see, loved ones. Okay, so obviously you must trust them enough to use your own money top up. Okay, I just pretend you trust them. Okay, this will also reduce your income tax. Okay, other than CPF top up, there's also SRS, Supplementary Retirement Scheme. A lot of people confuse SRS with CPF. These two things are completely different. Can anyone tell me SRS will earn you how many % per year? Go to the Zoom chat and tell me. SRS will earn you how many % per year? I give you a clue. It is not 4%. It is not 2.5%. Okay, how many %? What is SRS? Supplementary Retirement Scheme. That is a scheme that the government invented because they know CPF is not enough. Also, for people who earn more, they want to give a supplementary scheme for people who earn more so that they can retire with more. Wow, Boon Liang, not bad. Okay, it's between 0.05 to 0.5%. Now, interest rate every week, I receive new email to tell me rising, so I also lost track already. But it's in the zeros one, zero. It's very silly. How come government asks us to put money into something that grows at 0.05 to 0.5%? Because it saves you tax. Okay, so you can put maximum $15,300 per year, okay, into the SRS, and then the government will pretend that your salary is minus $15,300. Okay, so you have effectively reduced your salary in the eyes of the government when you put into SRS. And the government allows you to use your SRS to buy unit trust, robo-advisor, annuities, endowments, very, very flexible what you can use it for. Just now I say for special account, don't go and touch it to buy unit trust. But for SRS, please, for goodness sake, go and touch it to buy unit trust and annuity and endowment, okay? Don't allow that to be depreciating at 0.05 to 0.5%. So that's called SRS. Here are some quick mathematics. How much tax can you save if you earn $72,000 per year? Okay, some of us may earn less, some of us may earn more, but just use $72,000 as a guide. Okay, this just pretend I'm calculating. Okay, finish already. Okay, you can save tax of roughly $1,071 per year. And not too bad. Can buy a lot of plates of cai peng. Okay, yeah, go to NTUC, can carry a lot of plastic bag, come back. And maybe don't use plastic bag. Okay, use recycle bag. So remember, if you feel that inflation is very high now and you want to save on taxes, this is one very, very good way. And after you have top up $15,300, please speak to Erwin, Yuan Tai, or me. We'll give you very low risk, very guaranteed way to grow that at about 4 to 5% per year. Okay, 4 to 5%. If you don't like 4 to 5%, you want 8%, you want 12%, 20%, then 自己搞定, okay? 自己去找. Okay, we'll go and find those high risk instruments. Okay, I just want to show you that annuities are not doing too badly, because some people spread rumor about insurance product. They always say like, ayo, don't be silly. Insurance company, you should only buy insurance. You want to grow money, go to banks, go to Aberdeen, go to Schroeder, go to robo-advisor. Right? These people, I mean, I'm sure they mean well. They don't want you to lose your money, but they don't have the knowledge, right? They're speaking out ignorance. This is Monetary Authority of Singapore figures. Okay. Yeah. By the way, I know some of you say, this is 2020. How about 2022? 2022 is even higher now. Okay. Except that I don't have such a beautiful, colorful chart to show you. Yeah, but it's even higher now. Every number you see here is higher by about 1 to 2 percentage points. Okay, so now just as an illustration, you look at the top two. AIA is 6.21%, Prudential is 5.84%. This is not in a single year. This is the average per year in the last 10 years. Okay, so for Prudential, it has grown to 6.12%. Okay, it's grown. AIA also has grown, but I won't announce the figure here because I represent Prudential, by the way. Okay, so this chart proves to us without doubt that the numbers are healthy. Okay, even the lousiest one, sorry to use the word lousiest, but it is really lousy. HSBC Insurance, the lousiest one is 4.42%. Buay pai lah, buay pai, okay? Don't be too greedy. So all of them are very healthy number. So don't believe anyone who tells you that, hey, you don't be silly, go and buy annuity for what? Right? Of course, you must minus profit margin. So insurance companies generally take around 0.9 to 1.2% away from this percentage as their profit margin. I mean, they have to do rental, pay for the furniture, pay their salary, right? So we have to share. Right? So we still get a healthy about 4 to 5%. That's why I keep saying 4 to 5%, 4 to 5%. That's because it's 5.84 to about 6.12 minus 0.9 to 1.2. Okay, sorry for so many numbers. Yeah, but basically, just remember 4 to 5%. Okay, now let's look at my retirement plan. So I'm showing you my retirement plan. Okay, this is not a product I pull from a brochure. This is my retirement plan. Okay, I've chosen to set aside $1,212 every month from my hard-earned savings to put into this thing. How long am I putting in? By the way, I'm 46 this year, so I bought this plan last year. Okay, at the age of 45, I started putting in, and I plan to keep putting in for 15 years until I turn 60. So in total, I would have saved $218,160. This is my own money. Okay, not that anybody helped me grow. This is just my own money. So the question here is, how much will I get when I retire? Okay, announcing the number. I will get at least guaranteed $1,480 also for 15 years. Because I save for 15 years, so it's only fair that I also receive in 15 years. So from age 65 all the way to 80, or thereabouts, I don't know how long I will live. Yeah, but of course I pray very hard I will live past 80. But let's say I pass on at 80, then just nice 15 years, I will receive at least 1,480 per month. Per month, but not per year, per month. So not bad. My 1212 has grown to 1,480 without any effort. And really, without any effort. Just now, Yuan Tai talked about low effort, right? Mine is zero effort. Zero. right? Because once I sign, I can pretend I don't have this plan. Like CPF, right? I can pretend I don't have CPF, then wait till 65 to receive the money. Oh, I know some of you say, 65 so long. I tell you, if you don't do such things, by the time you reach 65, I really don't know how much money you have left, okay? This is the problem with us spending too much. So please force yourself. This is called a discipline, right? It's like people fasting, it's a discipline. People praying 3 times a day, it's a discipline. So please have this discipline of setting money aside, pretend you don't have this money, so that at the age of 65, you can enjoy the fruits of your discipline. Okay, 1480 is minimum. Yeah, but of course, that is not exciting. The exciting one is the bonus. So every single year, my money, Mr. Eugene Xia's money, will have a bonus of at least $267. Okay, that one is called a variable bonus. Anybody who has worked for a company will know what is variable bonus. That means they fix the salary at $5,000 per month, but come December or come March, then suddenly they give you 3 months bonus, 2 months bonus. So that's called bonus. And my annuity will also pay me a bonus, monthly bonus, not annual bonus, of at least $267. Okay. It says variable here, but by the time I turn 64, I will know exactly what's the variable bonus. So it could be, for example, $269, or it could be, let's say, $249. Okay. But definitely there will be some fats above 1480. If you look at the yellow, that is also very exciting. So this annuity promises me, okay, promises me, right, this is registered by MES, our government, that every year my yellow bonus will grow. You see, 114 will grow, then the 114 becomes fixed. And then 115 stack on top of 114. So my second year monthly income grows. Then my third year, the 114 plus 115 is become fixed, and then add another 114. So this goes on for 15 years in a row. In other words, guaranteed beat inflation for those 15 years. Okay. I don't know about you, but I love, okay, LOOOOVE. I love this plan. Of course, like Yuan Tai, I also buy stocks, dividend stock. I also invest in property. I also do REITs, ETF, a lot of other things. Okay, we need to diversify, like what Yuan Tai say. One of my tools, okay, not my only tool. One of my tools is CPF Life. Another one of my tools is private annuity. And because of this strategy, my $218,000 grow to $479,000, which means if you do simple arithmetic, minus 479 minus 218, I get passive interest of $260,000. Okay, not too bad, not too bad. I know some of you say, oh, with cryptocurrency, I can grow a lot more. Okay, then in that case, go and put into cryptocurrency. Okay, yeah, but for me, I want to sleep well at night. Yeah, so I put into this. Okay, now let me address the most common complaint. Okay, a lot of people say, wow, you want me to put money aside as a discipline for 15 years? What if in the 3rd year I lose my job? What if in the 5th year I want to take money to go Europe? You know, what if this, what if that? You know, and this kind of what if, this kind of fear and concern keeps people from topping up CPF Life, keeps people from buying a private annuity. So I'm going to address it right now. Ready? Ready. All of us, please practice this from now on. It's a habit. Okay, it's a habit. It's like every morning, wake up 6:30, go for a jog. This kind is called a habit. Okay, every day must eat three rounds of vegetables. Habit. So please have this habit from now on. Every time you have money coming into your bank in the form of salary or business income, immediately set some money aside as high liquidity. High liquidity means anytime you can take out to buy a Prada bag, anytime you can take out to buy bubble tea, anytime you can take out to lend to your relative who needs money. Okay, high liquidity bucket. But don't forget to also set aside money in the mid liquidity bucket, the green one. That means you don't need it immediately, but maybe in 3 years' time, you plan to buy a property, right? So you need down payment, you need renovation money. Or let's say your children are getting married in 3 years' time, you want to save up for their wedding to give a big fat ang pao. This is called a mid liquidity. So never ever use your green bucket to buy a CPF plan or to buy an annuity, because those are locked in for 10 to 15 years. Okay, don't be silly. Always put into mid liquidity. Okay, what do you do with the mid liquidity? Should you put in the bank or something else? Later, Erwin will teach you. Okay, Erwin will teach you. So stay back all the way until Erwin finishes talking. But for now, just remember, set aside in the mid liquidity. Finally, this is a lot of people forget this. You must put into something called the low liquidity. I tell you, the government is very, very worried. A lot of people keep putting into the red bucket, put into the green bucket, but never put into the blue bucket. Right? A lot of people don't top up their CPF funds. The government doesn't understand why. They say, hey, we're going to help you grow your money at minimum 4%, and then you don't top up. Very, very silly, right? So remember, okay, you must set aside some money. Maybe not $8,000 per year if you cannot afford, but at least some money. 1,000, 2,000 is better than nothing. And maybe you cannot afford $1,212 per month, but at least start with $500 per month, $600 per month into an annuity. So this is called a low liquidity. Okay, the very famous question is, what ratio should you put in? What ratio? So this is my recommended ratio for someone who is age 40 to 50, someone like me, for someone who is a breadwinner, someone with some children, maybe 1 child, 2 children, 3 children, right? If you fit my demographic, this should be your ratio. If you don't fit my demographic, then you need to talk to either Erwin, Yuan Tai, or me to have an individual ratio. Okay, we will advise you separately. So this is my ratio. If I have $1,000 per month as disposable cash, money that I don't need to spend immediately, not in PUB bill. Is there such thing as PUB? Sorry. Singapore Power bill, not in Singtel bill, not in insurance premium. It is disposable income. $200 should continue to be liquid. $300 should be in my mid bucket in case my wife suddenly wants to go to Paris 2 years later. Then I will have money. Okay, I don't want to tell her, say, sorry, I put all my money in CPF Life. Wow, she'll make me sleep in the corridor. And then the rest of the money, $500, will be used to top up my CPF Life and to buy an annuity. Okay. Wow, sorry, I talk very fast. Who finds that this 3 bucket strategy makes sense? Can you please put yes? Please put yes if you think that, hey, this is very logical. This is very logical. I think I better start doing this. Okay. So please put yes if you think this 3 bucket strategy makes sense to you. Okay. I'm going to stop talking for a while and drink water while you put yes. And if I don't see yes from you, I'm going to ask you to share what strategy do you have that is better than my 3 bucket strategy. By the way, I'm not claiming my strategy is the best. The ratio will be different. Very good, very good. 300, 300, 400, very good. Okay, you can choose a different ratio, but you must put into 3 bucket. Don't put into 2 bucket. Okay, you must put into 3 bucket. That's what I mean. Okay, very good, very good. In fact, while we're doing this, let's make it real. Okay, who will change the ratio? Go to the Zoom chat and type, what's your ratio? Okay, of course, you don't have to keep to it. There's no obligation, but at least, make it real, make it practical. Okay, what is the ratio we will choose if you don't choose my ratio? Right, is it 100, 400, 600, or what? Okay, please put the ratio and start thinking about this. Because if you don't even know the ratio, I promise you, you won't even do anything. That means tomorrow morning you wake up, your money will continue to be in the bank doing nothing. Hey, please put the ratio now. Thank you. Okay, 3, 4, 3. Yeah, that makes sense also. People who put more in the green bucket, most likely, right? That means you can imagine in the next 3 to 5 years, you are likely to spend a lump sum money, right? I can give you a few examples of lump sum money. Your children go to university. If you have started saving since they were born, you shouldn't have any problem. But I know a lot of parents didn't start saving since their children were born. Then they start to panic now when the university is 3, 4 years away. Then you need to save more money in the green bucket. In case I die young. Yeah, in case I don't live so long. Use the word live, not die. In case I don't live so long. Okay, very good. Very good. Okay, don't need to wait for everybody to type. Don't worry, no obligation. Yeah, but at least you start thinking about it. Okay, now let's put everything together. My CPF contribution, everything will lead to roughly $350 to $2,200, depending on how much did you put inside your CPF. And then my private annuity will give me altogether about how much? Yeah, $4,600 per month. Don't forget, this is only 2 of the 6 strategies. Imagine 2 of your 6 strategy can give you $4,600 plus dollars. Wei pai, right? And then if you also use Yuan Tai strategy of investment portfolio, property rental, easily, okay, you can get about $10,000 per month. Don't forget, $10,000 per month when you retire is roughly $5,000 per month today, right? Because of the inflation. So it is just nice. Okay, you must aim for roughly $10,000 per month when you retire. Then you won't be very cash tight, and some of you might even become a burden for your children, right? Can you imagine? You cannot afford to continue living in your property. You have to sell it off. Then you have to move in with your children, and then wow, with your daughter-in-law quarrel. Oh, headache. So please, be a financially independent elderly, right? Don't become a burden to your children. Of course, if your children want to take care of you, let them take care of you lah. But I'm just saying, don't become a burden for your children. Okay, I have an announcement to make. Okay, please pay very, very special attention for the next 3 minutes. This is a special announcement, fresh from the oven. Okay, this is the first and only such plan in the whole of Singapore. I'm not going to tell you which company because I'm not supposed to sell you any product tonight. So just remember the concept. Okay, just remember the concept. Forget about what plan is this, what company, doesn't matter lah. Okay, just remember the concept. Imagine that you put in $100,000. This is your own money. It can be $50,000. Okay, minimum $50,000, right? But let's say $100,000. Okay, you have saved up for the past 20 years. You don't know what to do with your $100,000. And if you put into this one time, not every month, $100,000, just one time, then it will start to grow, right? Yeah, and the growth may not be so steep lah. Okay, this is all illustrative. But here's the special thing. This company will lock in. Okay, if you're writing notes, please write in lock in at the highest peak as your value. That means even after the market crash, your value will continue to be locked in at the peak value. I know just now I said too good to be true, definitely not true. But this one is registered with the MAS. Okay, the first time I saw it, I got a shock. I fell off my chair. I'm thinking like, why would this company be so stupid to launch such a plan? This is clearly beneficial for the consumer and not beneficial for the company that issues it. Yeah, but never mind. Maybe one day they'll regret and cancel this plan. But meanwhile, quickly park your money inside this plan. Okay, and let's say the whole thing crashed and the whole thing doesn't work. At the bare minimum, okay, they promise you, this is a personal guarantee promise, that your 100,000 will keep growing until it reaches $160,000. This is called your death benefit. That means you won't enjoy it one. This is for your children one. Okay, so imagine, I know it's a little bit complicated. This one, I just want to show you that there's something like that in Singapore. Then if you want details, then you talk to Erwin, Yuan Tai, or me, then at least we can explain all the numbers to you, okay? But now, because of the time constraint, just remember that there's something that locks in at a peak and never comes down. Okay, let me show you a real, the minimum requirement is 50K. So if you don't have 50K in your bank doing nothing, then you can just forget that I said this to you, okay? Now, and feel free to WhatsApp me, okay? I know now you may not have time to WhatsApp me. Quickly take a picture of this slide first, okay? Take a screenshot, take a picture of this slide, and then after that, WhatsApp me 50K. Okay, not to buy anything, but to ask me for more details. Yeah, then either Erwin, Yuan Tai, or me, depending on who invited you, will share more details with you based on your age and based on the amount you want to put in. Is it 50K, 60K, 70K, 80K? Right, so that we will share. Then after we share, you can still choose not to do anything, but at least you have new knowledge. Okay, so completely no obligation. Okay, let me show you a real chart. This is illustration. This is a screenshot from a brochure. Let me show you a real chart. This is a real chart. Okay, this is called the Global Tech Fund. The Global Tech Fund, since the 210 has been going up, and then suddenly Russia attacked Ukraine, come down. Okay, let me show you some of the prices. Right, in the 2011, it was hovering between 50 cents to 60 cents. And then because of COVID, right, a lot of people using technology, right? Do you realize how much we use technology during COVID? then it went up to $2.90 to $3.10. It has, you can calculate, right? Calculate how many % growth has it gone up to, okay? And once again, I'm not promising you this kind of growth. I'm just saying that in the past 10 years, it has grown that much. And then because of the Ukraine war, it fell, right? It fell. It didn't fall to 50 cents. It didn't fall to $1. It fell to $2.10. And then in the past 2 weeks, it went up again. So currently it is on its way up. It can also go down. Okay, I can't predict. Okay, I have no crystal ball. But the point is that now the new range is much higher than the old range. So what's the relevance of this? Imagine you get this kind of plan. So as it goes up for the next 3 to 5 years, all the technologies start coming back in full force again. The war has ended and people forgot, hey, what's COVID-19? I never heard before. I tell you, your money is going to be ridiculous. No promises, but at least if it goes up, down, this company always locks in your value at the highest possible. Okay, enough for this. Once you're interested, quickly WhatsApp me, okay? I know later you take a picture of this, then you go to sleep already, then you forgot. Okay, so WhatsApp me, and then I will show you details. After the details, you can choose to do nothing, but at least receive details first. Okay. Whoa, wow, sometimes I really talk too fast. Can you put in how much money you want to receive per month for your retirement? Then we can strategize for you. Okay, is it 5,000, 7,000, 8,000, 9,000, 10,000? We put in how much money you want to receive passively for your retirement. That means from 65 to around 80, how much do you want to receive per month for your retirement? Okay, go to the Zoom chat and just quickly type in the number. I believe in something called the law of attraction. That means when you don't declare something, nothing much will happen, right? Because success is not an accident. But if you believe in the law of attraction, that means when you declare something, right? Either you believe in God, declare to God, or declare to the universe, or declare to the Jedi force, right? Then something starts to happen. Then your intention starts to be there to do something about it, to get that $2,000 per month, to get that $5,000 per month. Okay, so this is the time to declare to the universe, to God, that yes, I want to actively have discipline to plan towards $4,000, $5,000, $2,000 per month as my passive income. Okay, Yuan Tai and me and Erwin, we will help you strategize. And once again, after we strategize and show you what you can do nothing, right? Action depends on you. That nobody can ever force you to take any action. But at least you will know exactly that, actually to reach $5,000 per month, I should start saving $1,200 per month now. Or I should start saving $800 per month now. Okay. So once you scan this QR code, and then Yuan Tai, if you don't mind, put the link in the Zoom chat. Then all of us just give me 2 information. I just need your age. Okay, not your birth date, just your age. If you're 47, put 47. If you're 52, put 52. Okay, I need your age. Not in the Zoom chat, sorry. You have to click on the link first. Okay, click on the link and then put your age there. And then number 2, put the amount that you want per month, like 5,000, 2,000, 3,000. Okay, these are the only 2 pieces of information we need from you. Then we can strategize for you already. And once we share the strategy with you, you can just look at it and do nothing, or you can do something. Totally, the control is up to you. You are the judge of that final decision. Okay, not us. We are just going to do you a small favor by sharing with you the strategy. That's all. Okay, once you are done, can you put done, D-O-N-E, so that I know when to change slide? Okay. Let's not take more than 20 seconds to do this. Wow, Lynn is very fast. Very good, very good. Or let's not take more than 20 seconds to do this. Just scan the QR code, put your age, and put the amount of money you need. And then the rest is done by Erwin, Yuan Tai, and me. And this is our personal promise. We will never ever share your personal data with anybody except Straits Times. Okay, no. Of course, we're not going to share Straits Times. Okay, Diana is done, Merlin is done. Okay, just 5 more seconds to go. 5, 4, 3, 2, 1. Okay, thank you very much for your trust. Okay, this is our personal promise. By the way, our reputation is more important than selling things, right? Because if we do something unethical, illegal, immoral, step on your toes, then we have to lose our license already. Okay, so we will always protect your privacy. Okay, now the final segment is Erwin teaching you how to grow that green bucket. Okay, you shouldn't just put in the bank. You can do a lot more things with it. So please welcome Erwin.
Thank you, thank you. Okay, let's go into the final part and the final pillar. And the last pillar that we're going to talk about is about interest rates. Interest is something that a lot of people know. In fact, some of you guys might have heard the news, a certain bank starting up with a new kind of savings account with higher interest, or a certain transport company with a telco company coming together to create a new digital bank. And today we are going to talk about that. Okay, so I am in a family of 5, and my parents, as you can see from my family picture over here, very, very lovely. They are aging. And as the eldest son in the family, I take it as my personal responsibility to make sure that my parents are able to enjoy life and I get to give back to them what they have done for me when I'm younger, and also to be a good role model for my siblings. So I am very, very, very interested in where I can grow my interest. And one of the ways that people are doing it is through the banks, because banks, everybody knows, gives interest, but the standard interest rate at 0.05%, that's not enough for me. I want more interest. And we're going to talk about some liquid instruments. Over here, there are 3 instruments on the screen. I would like you to guess, which of these do you think has the highest interest rates? Is it A, Safe Cash, a robo-advisor, B, DBS Singapore, or C, the Bank of China? Put your answers in your chat. Put your answers in the chat, A, B, or C. Which one do you think has the highest interest rate currently, as of today? BOC by Boon Liang, Merlin as well. BOC, Bank of China. Lin going for Bank of China as well. Wow, everybody, it's almost as if you have attended the previous webinar. And unfortunately, that would have been the answer for the previous webinar. But now we have DBS Singapore. DBS Singapore has actually came out with a new savings plan, savings account actually, not a savings plan. And I'm going to cover them, okay? But to answer your question, Bank of China, yes, it used to have one of the highest, in fact, 3.0%. But there is some requirements that comes with earning interest, such high interest from the banks, okay? So the first one we look at is the Smart Saver account from Bank of China. So you can earn up to 3%, okay? But this is limited, okay? Limited to the first $80,000. And there's criteria as well. You have 1.5% from your insurance policy payments, 0.5% up to 0.5% from your debit and credit card spend. Bill payments via gyro and internet banking up to 0.3%, and salary deposits of $6,000 up to 5%. And you notice a trend over here, everything is telling you that to get more interest, to get more money, you spend money, which is the opposite of what I want. When I want interest, I want to just park my money there and do nothing about it and let it grow. And also another bank that is very popular in Singapore, POSB, also has higher interest up to 2%, but only for the first and second year and limited to $3,000. Anything after that, it goes back to the standard 0.05. And now it brings us to the question, the bank that we're talking about right now, DBS Multiplier. It's a new account, okay? But you'll notice the 3 red circles over there and the last circle on the bottom right, 3.5%, you must have transactions of $30,000 per month, not per year, okay? Per month. And it is only available in the second batch of $50,000. So the first $50,000 that you spend, even if you go above 30K, you only get 2.5%. Only when you spend that $50,001 onwards, you get 3.5. So I don't want to spend money to earn money, right? I want to just earn. I am a very greedy person. I don't like my money to be pushed away while I'm trying to get back the small little sums. And what do I turn to? I turn to my robo-advisors. In fact, I have a few of them over here, research and update as of today with the highest interest rate at 2.29% from Money Hour as of today. So this 2.29%, how do you earn this money? You put it in step 1, and then step 2, you profit. There's nothing else. You don't need to spend money. You don't need to do anything. You just put your money inside and you immediately get 2.29%. All you have to do is to have minimum starting balance of $10. But to be honest, I touch my heart. If I'm going to put money in a savings account, I'm not just going to put $10, right? I'm definitely going to put more. So this 2.29% is almost free compared to the previous ones, the banks. And you can see over here, the other robo-advisors, they are still quite competitive as well. The second that's coming up, Endower Secure at 1.7 to 2%. And all the other robo-advisors, they're not that far ahead. In fact, if you look at each of the numbers, everything is at least 1%. And that for me is enough, already better than my 0.05% from my current POSB account. So you are now looking at robo-advisors. You're now thinking, should I go? Do I understand robo-advisors enough? Okay, so I've come up with a table for your easy understanding. The differences between the banks and the robo-advisors. First of all, we look at banks. Everybody is in love with banks. Everybody has one bank account, I hope. Okay, and every bank has this thing called the SDIC, the Singapore Deposit Insurance Corporation. And this has been covered by Eugene in the very, very early part of the presentation. It protects your money, and in case, touch wood, the bank falls down, the bank crashes, you get back 75K. You can have $100 in a bank, but you get 75K. You can have 1 million, still 75K. And also, banks, the banks have a capacity as a lender. They are there to lend money, and they earn money through the interest rates. And when people borrow money, they earn the interest, you get a little bit back, and the 0.05% is the interest rate that you earned via the bank earning from other people. That is how your interest rate comes about. And also the deposits and withdrawal, everyone is familiar. It can be done in 1 minute, very, very quick. Now on to the robo-advisors. Robo-advisors itself is not insured by the SDIC. This is very important. So how do you work around this part? I don't like this as well. How do you work around? Most robo-advisors, they actually park your money in a bank. So as they are doing the investments with the money and everything, all the money is safe kept inside a bank, which then also means that the money is technically secured under SDIC as well, because the money is parked in a bank. And also, as I mentioned, through investments, right? Robo-advisors, they earn their money through investments. They continually invest the money that you put in with them from low risk to high risk. And in fact, if you want to know more about how you can invest with robo-advisors, we have another webinar. Just let me, Yuan Tai or Eugene know, and we'll send you the link to that webinar. Very, very helpful for you, I believe. And also, interest rates can vary between every platform. And not only that, with a different time period, you may have a different interest rate as well. So it is not fixed, but it's still, to me, it's higher, and that's good enough. The last thing to take note is that the deposits and withdrawals will take time. It is not done in 1 minute. It usually takes 1 to 2 business days. Okay, now to sum it up, the 3 pillars of abundant retirement. The first pillar being investment, spoken about by Yuan Tai. Property, dividends, and the low effort portfolios by Eugene. The income pillar, we have CPF Life and annuities. And lastly, on the last pillar, we have interest on robo-advisors. So I'm going to pass time over now to Yuan Tai, who will be conducting a small little quiz, and you can stand a chance to win a $10 GrabFood voucher. So I hope everybody participates in the quiz. Everybody, please join in. And Yuan Tai, you may take over. Thank you so much.
Okay, thank you, thank you. Let me quickly share the link. Okay, everyone, please go to the chat box and click on the link in the chat box. Okay, you can see the link, quizits.com. Please click on the link and join the quiz. Let me share screen. Okay, there on screen. Okay, let's have everyone, as many of you to participate. Come, join the quiz. The top 3 will have $10 Grab voucher. Join the quiz, join the quiz. Let's have more people joining the quiz. I have 6 people so far. Let's have 4 more. Let's have 4 more to join the quiz. Please click on the link in the chat box. Yeah, please click on the link and that will bring you right into this quiz. Very fun quiz, just 6 questions only, very quickly. And the top 3 will win the Grab vouchers. Let's have some more, 2 more to join. Let's have 2 more to join. Join the quiz. Let's play together. Okay, let's have 5 more seconds. 5, 4. Okay, please click on the link in the chat box and join me in the quiz. 5, 4, 3, 2, 1. Okay, I'll start the quiz now. Okay, here are the questions. 6 simple questions. You have been paying attention for the past 90 minutes. You find them quite easy to answer. Giveaway questions. Okay, let's look at the leaderboard. Okay, what is the maximum amount CPF Life? Leverage annuities, return of what's highest possible interest rate, DBS multiplier, and money hour wise saver. Okay, Merlin, Boon Liang, and Lin are in the top 3 right now. Well, let's see if they'll finish the top 3. Okay, I'll give 10 more seconds for everyone to finish up. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, thank you everyone for participating. The top 3, we have Boon Liang, Lin, and Merlin. Congratulations. Congratulations to Boon Liang, Lin, and Merlin. Please drop me a private message, your contact numbers for those who don't have. I don't have Lin and Boon Liang. Yeah, Merlin, I know you. Okay, now everyone, let's